some extent. I think that really indicates everybody had David Zaslav wanting this job, and that was not true. It never was. But to your point, Carl, we're not done with the debate around CNN is not going to be owned with CBS. They're going to be together. There's going to be serious job losses. That's part of the synergy. $6 billion when you're trying to find cost. Yes, they're going to be combining news organizations. One would expect, and a lot more from there. So that debate, I would assume, will continue to rage given the political.
And that's just an industry that is.
Yeah. No.
We're at the top, and you'd say, boy, the rates are going to go up.
Guys, speaking of job losses, back to our lead story this morning in many ways, the Jack Dorsey announcement, of course, which is still reverberating in terms of cutting almost half of the company's employees, going from 10,000 to less than 6,000 at Block. That stock is up. And we've been talking for months and months, for years almost now, that the impact AI would have on jobs. I would note, guys, Andy Jassy was asked a question on Squawk Box that we've been trying to entertain for quite some time. I thought it was worth taking a listen.
I haven't really digested that news very much, and I think every company is going to make their own decisions on these things. And, my view is what we've talked about in the past, Andrew, which is just, I think that this is the most transformational technology shift that we've seen in our lifetime. I think it's going to impact the way we all do our work. And I do believe that a lot of the jobs that we've thrown human beings at for the last 20 or 30 years, you won't need as many human beings doing those same jobs.
By the way, can I just add, Amex today is almost in a 20% drawdown.
Yeah, and that's just ridiculous.
By the way, can I just say,
it's ridiculous. And this is
so long to say, but
All right, fuck it.
Order filled.
And that's happened in every technology.
Five America's best right here.
Sorry.
No.
So you're not worried about white collar consumption at all?
No. Not at all. Not at all.
That is just terrible.
No, that is Steve Squarey is so good, and they have Jay-Z. People are going to cancel their credit cards. It's ridiculous. Because
I like that freaking long ass wick right there.
And there are going to be new companies that are going to hire you. And by the way, is it so bad that there's a blue collar outbreak of jobs that you want to buy? You want to build all things that Corey says? You need to know particular skill. And you go back. So many people went to college. Maybe they shouldn't have. Maybe that was the take. That everybody knew that liberal arts degree. And maybe you're going to have to do some shifting. And it's not so horrible. It's not.
Well, we'll see how many communities want a factory or a data center in their town, Jim. That's going to be the next choice of
Texas. Like
Oh no.
They like
everything. They like it big.
Yeah.
It's Texas.
All your exes live in Texas.
That's a good one.
I can't help that. I like that line.
Interesting thought. New Mexico, they're willing to take jobs.
Dow is down almost 800. Amex, the worst performer. Let's
Damn.
Hey,
It's the fucking fix up.
Hi, Carl. Indeed, this is a very good number. Our February read on Chicago PMI.
God damn it. What fucking news is coming out?
Order filled.
57.7. That will be the best level since May.
Jesus Christ.
2022. And last
Volatility
month,
index is at 21.
Of sub 50. That was the first over 50 number since Nov of 22. So these are very important data points to pay attention to. I'm sorry, Nov of 23.
Order filled.
We hope that we start to see more manufacturing picking up in other numbers. Next week we'll have ISM and S&P on both manufacturing and service sector PMIs. Suffice it to say, the big news today is how bad equities look, and 10-year note yields finally diving under 4%. Squawk on the Street will return after a very short break.
much to feel like royalty, and right now, the Burger King Kids Meal only costs $3.99.
I agree, but still no.
Families earning
Higher education is outdated, irrelevant.
Volatility index is dropping.
For the status quo.
At Grand Canyon University, we shatter it.
And we're redefining what higher education
Oh,
looks like.
fuck. No, it's not.
With a
No, it's back
pioneering
up. Son of a bitch.
Classrooms, they're incubators for bold ideas. Our academically rigorous, industry-driven programs reflect a commitment to merit
Order filled.
and truth.
Order filled.
Education should be a privilege. Affordable education should be accessible to all.
You want opportunity. You want purpose. A chance to lead and serve in meaningful ways.
This is more than just education. It's preparation for a life that transforms.
This is purpose-driven education. Take action. Find your purpose at Grand Canyon University. Visit gcu.edu.
If your child could use help catching up in school, Kumon can help with a structured approach that's proven to build confidence and mastery, one worksheet at a time. Catch up.
It's not. It's going the fucking other fucking way.
Oh. Are you serious? I can't see your screen from here anymore. That's insane. You can't see it. It disappeared. How did you do that? Can you see that? What did you do? What?
When you're protected under our roof, your family's free to enjoy their dreams. Bundle life and save up to 43% on home and auto. American Family Insurance. Get a quote and find an agent at amfam.com.
I started a business to give old folks a new life, and Chase has supported me from the beginning.
Take a look at the Dow, which is down 800. Almost half of that, roughly, is Goldman and Amex alone. Definitely a defensive crowd when you consider the leaders at the moment, which include Verizon, Merck's in there, Amgen, McDonald's. We're watching that closely as we're holding on S&P, though, to 68.45. We're back in a minute.
Every truck month, trucks talk tough. Only one delivers the trucks worth talking about. Ram Truck Month. The most powerful light-duty gas lineup in America. Backed by America's best powertrain limited warranty. Built to never stop. Hurry in for great deals during Ram Truck Month. The only one worth the talk. Nothing stops Ram.
Right now, during Ram Truck Month, well-qualified current FCA lessees can lease the 2026 Ram 1500 Big Oil Crew Cab 4x4 for $399 a month. Don't miss this great offer. Your local Ram dealer.
My moderate to severe Crohn's symptoms kept me out of the picture. Now I have Skyrizi.
And now I'm back in the picture. Skyrizi is the only IL-23 inhibitor proven to help achieve remission, meaning few no symptoms in just 4 weeks for some people. Many were in remission at 12 weeks, at 1 year, even at 4 years. Plus, Skyrizi is proven to help visibly repair damage of the intestinal lining. Don't use it allergic.
Bunch of sellers just came in.
Increased infections or lower ability to fight that may occur. Before treatment, get checked for infections at TB.
See, I like that wick, but
Symptoms of vaccines. Liver problems leading to hospitalization may occur when treated for Crohn's.
Now's the time to take control of your Crohn's. Ask your doctor about Skyrizi, #1 prescribed biologic in Crohn's disease.
It's the wall-to-wall sale at Furniture Row, and that means everything is on sale. Like sofas with contemporary elegance and lasting value, to deep-seated reclining comfort, dining tables that fuse form and function, to classic charm with contemporary silhouettes, organic modern beds with minimalist lines, to simple elegance and cool calming versatility. Plus, save up to $200 on our Denver mattress swap lineup. Shop the comfort, the style, the selection, the savings. During the wall-to-wall sale, only at Furniture Row.
Because it's a failing all over the block. John, I can't get Jurassic Park back online without.
Whoa, this place is awesome. By the way, you should have plugged this in.
This is gonna be a lovely weekend.
If you like pina colada. I'm taking my arms along to the roar again.
At the same price for 5 years.
Son of a bitch.
Jim's got his monthly club meeting in a couple of hours, and you've been talking about it all week. And I got to know what you're going to say.
Okay, well, look, I'm going to talk about people who are whining, people who are right, and people who are wrong. And I'm going to go through the portfolio and be very hard on myself. There are 3 or 4 stocks that I literally say I'm wrong on. I've got to do something about, and they're big companies. And I think you got to listen. I really urge people to sign up because this is a very unorthodox meeting where I say that I am wrong on this one. I have to change.
Well, I mean, given the dispersion, the number of stocks that have hit new highs versus new lows just this month alone.
Yeah, I mean, you got to buy drug stocks. You got to buy consumer packaged goods companies. You can't buy blue companies as long as you stay.
Come on, turn red.
Well, I like my blue trader very much, but people were spending beyond their means. And I think, by the way, just so you know, I cannot be bearish with the 10-year. I cannot be bearish with that PMI number we just got, which is terrific. And I am going to be saying that the data center and AI are positive. Okay? Yeah. Okay. Zaz, $7 worth 28. There's a.
It's just bouncing around here at my break even.
I'll see you tonight. Have a good weekend. 6 p.m. Eastern time. We'll watch the markets this morning. Banks down 2%. IT down about 2%. Don't go anywhere.
Volatility index is still pretty high. It's up 14%.
Just the tips.
Just the tips?
Stops those splitting, slickety split. Look at those ends, they are amending.
That's what I call a happy ending.
Back in ABC and Spanish Pop.
Flip red.
welcome to the screen. I'm Carl Quintanilla with Leslie Picker and David Faber, live at Post 9 of the New York Stock Exchange. Sarah's out today. As for markets, closing out February with a little bit of drama. Dow's down about 800. S&P back below 6850. Financials definitely a drag, along with tech. Some support from energy going into this weekend of Iran jitters. Healthcare and stable a little bit. 10-year below 4. That has not cracked back above. Head this out. OpenAI closing a massive
Just from the fucking bottom.
$10 billion funding round with backing from Amazon, NVIDIA, and SoftBank. Tech investor Dan Niles with us to discuss. We'll talk to the CEO of cloud security company Zscaler, down sharply after results. And the latest, of course, on the
Order filled.
Every saga as the company deems Paramount's bid superior.
First up, let's get some new economic data that just crossed. Rick Santelli has it for us. Rick.
Yes, David.
Order filled.
Construction spending for December. Also, they will be releasing very quickly November, which was not released yet. Up 0.3% for these. This is 1/10 better than expected. And it really does underscore some pretty decent data. Chicago PMI was pretty strong. And interest rates, well, they're under 4%. A good thing for the housing market. And ultimately, we want to see if it can close under 4%. The last close under 4% was November 26th of last year. Leslie, back to you.
Rick, thanks so much. Rick Santelli for us. Let's get to the broader market with red across the screen to end the week after a hotter than expected inflation print. Joining us now is Max Kettner, Chief Multi-Asset Strategist at HSBC Bank. Thank you very much for being here, Max. Help us understand what exactly is going on under the surface, because you've got PPI, you've also got the block news and the potential, concerns surrounding replacement of jobs with AI and other bots. How would you characterize what you're seeing on the screen today?
Yeah, look, I think there is a lot of narratives going on right now. Just you mentioned the job displacement narratives, and then obviously a couple of weeks ago, I think 2-3 weeks ago, we had the narratives around what kind of sector are we going to sell off today, right? I woke up every day and I thought, okay, which sector is it going to be? Is it the transport and the freight sector? Is it going to be insurance? And then one day it was commercial real estate. So I think there's a bit of a sort of a narrative, narrative inflation almost going on, and at the same time we're focusing very, very little on the data. Look at you guys have just mentioned Chicago PMI, but actually not only in the US. When you look across the globe, you look at the most open, most manufacturing-driven economies. Look at the likes of Korea, Taiwan, Sweden, Netherlands, Czech Republic. You're really seeing across the board some proper cyclical momentum, particularly in the manufacturing sector building up. And I don't think there is enough emphasis on that. There is a bit too much emphasis on the AI narrative. Who knows what's going to happen in a couple of years? Who knows? I think we're really, really ignoring a little too much, particularly the US rate side of things, ignoring too much what's happening under the hood. Is a proper textbook style cyclical recovery right now.
Yeah, I think that, one of the big drivers of the moves today are financials. You've got alternative managers under pressure, big banks under pressure as well. And I'm just curious, as you mentioned the cyclical recovery, we are seeing pockets of defaults in certain portfolios, especially across the BDC landscape. How concerned are you about this being early innings of some sort of credit cycle, given what we've seen this week with those BDC earnings?
Not an awful lot, Leslie. I think the main point from your question is we are seeing pockets of the defaults. Well, actually, when we look at on aggregate, when you look at the last sort of 15, 18 months, you look at public high-yield credit defaults, you look at things like private credit delinquencies or bank loan delinquencies in the US specifically, they've actually started to peak and go down about a year and a quarter, a year and a half ago, so at the end of 2024. And funnily enough, you guys might remember, about a year and a half, 2 years ago, it stopped that people were talking about these lagged effects and the lagged impact of rate hikes. Remember, there was the story that so many people are on for about 2 years. When is the long and variable lags of monetary policy, of that tighter monetary policy finally kicking in? And I was just speaking to a colleague actually right now. When you look at it in the last year and a half, I've had genuinely not a single client ask me about, hey, you know what, rates are coming down. That should be good for the economy. That should be good for some of those distressed some of the more highly leveraged companies. Actually, we should be even looking at household debt. Look at something like credit card delinquency. They've started to trend down as well. So yes, you are seeing those pockets of defaults, but on aggregate, the data on delinquencies is actually getting stronger right now, not weaker.
Yeah, broadly speaking, I would say in the private credit space, it's getting a little bit weaker, but part of that has to do just with all the activity that was made 6 years ago, 5 years ago during the pandemic, and obviously the world has changed a lot since then. You are max overweight equities right now. What do you tell clients who are, looking at the screen today, all the volatility in recent weeks, about just the uncertainty and the psychology of the market and how unpredictable it all is?
Yeah, look, I would say there is not
Order filled.
US, and there's, even if you are bound to the US, there's not just one sector. Look at the US, for example, in the last 3-4 months. Clearly, what we are seeing in some of the consumption data is that the lower end of the K-shaped economy, so the lower income households, they're actually starting to see a bit stronger consumption. So what we're seeing in the high frequency data is that low income households, the consumption, the gap with the higher and middle income households, that's starting to close now. And that's really good, right? That should be helping some of those sectors that are exposed to that. So the likes of the regional banks, transport, home builders, but XRT, like things like US retail as well.
It's too fucking
and of course, if
tight.
you're not down to the US, look at other markets. Look at the UK, look at the FTSE 100 with the miners, the banks. Look at Europe overall with industrial goods and services, where you've got exposure to things like the miners, you've got exposure to things like the defense story in Europe, to things like the German
Stop loss
infrastructure
is too
story,
fucking
or
tight,
the
dude.
European banks. So look at an
Giving
emerging
myself any
market where
fucking
there's
room.
an awful lot of opportunity. I think not just outside the US, even within the US, away from some of those beaten up sectors, I think there's clear signs of improvements on some of the lower end of that K-shaped economy, but particularly outside of the US, that's really where I think at the moment, tactically at least, that's where the most attractive opportunities are.
Although certainly here in this country, Max, the share of U.S. delinquencies is at the highest since 17. Our savings rate is at a 4-year low. Real disposable income basically didn't grow in the second half of last year. You're counting on that not getting worse.
Oh, you guys are trying to make me beg. No, look, guys, I think like on the one thing that I would say, however, is when you look at the wealth gains, so away from delinquencies and all that, when you look at wealth gains and you look at real wage growth, in fact, when we look at sequential real wage growth, so look at like 3-month real wage growth, for example, since the first quarter of 2022, that's almost consistently been positive. So almost consistently, we've seen real wage gains. That's positive for the consumer. And on the wealth side, again, even last year with the gains in equity prices, we've seen a tremendous added wealth in terms of overall household wealth. And on top of that, that has actually not been concentrated just like in the 2010s. It's not this time around been focused on the higher income households. It's the younger households, it's the lower and middle income households that have also, in the last 5-6 years, participated in these higher wealth gains. So it is, I would say, not only about delinquencies, it's also about the strong household wealth gains and the strong, particularly in the last 3.5 years, that strong sequential real wage gains.
Yeah, what you're seeing with the K-shaped economy. Capital markets certainly doing well with regard to both the private markets as well as deal flow. So we'll talk about that in a little bit. Max, thanks so much.
OpenAI raising $110 billion. Yes, $110 billion. It's the largest private fundraising ever, maybe the largest ever, period. It values the company at $730 billion. The backers, well, it includes Amazon, NVIDIA, SoftBank. Kate Rooney's been following this closely for us and has some more details. Kate?
Yeah, David, you're absolutely right. It is a record in late-stage tech financing. It's $110 billion, more than double OpenAI's last record-breaking deal from SoftBank. If you think about that last year, $40 billion. This time around, you've got SoftBank doubling down with another $30 billion plus $30 billion from NVIDIA. And then the biggest, newest investor here is Amazon, investing $50 billion. That's going to be coming in different tranches. So an initial $15 billion, followed by $35 billion, they say, in the coming months when certain conditions are met. They didn't say what those conditions are specifically, but part of this is going to be a strategic partnership. OpenAI does plan to use a huge amount of Amazon's custom AI chips. It's about 2 gigawatts plus creating special models to power consumer models. For example, think of things like Alexa. Amazon CEO Andy Jassy and OpenAI CEO Sam Altman appearing together on our air earlier this morning on Squawk Box. Andy Jassy saying that OpenAI is going to be one of the very big winners out there in the long term. He says Amazon can help them quite a bit in this partnership. Altman, though, responding to some questions over the circular nature of some of these deals and critiques out there that money could be going into OpenAI that might end up back at the hyperscalers. Here's what he said.
I get where the concern comes from, but I don't think it matches my understanding of how this all works. It only makes sense if new revenue flows into the whole AI ecosystem. If people are not willing to pay for the services that we and others offer, if there's not new economic value being committed, then the whole thing doesn't work, and it would be circular. But revenue for us, for other companies in the industry, is growing extremely quickly.
For Amazon, at least, if you think back to its first real bet on AI, lost $8 billion in Rival and Anthropic for OpenAI. It does shake up the entire landscape here. Amazon, Rival. Meanwhile, Microsoft is one of OpenAI's biggest backers. All of those saying that that deal is still strong. They're still strong partnerships, but a lot going on.
Yeah, I saw the joint statement. And the OpenAI Foundation now is like $180 billion, is at least where its stake is valued as well. Do we know anything, though, about, like, where is the money staged? Is it dependent on certain metrics being met? Not just for Amazon, where you've already told us about, but for NVIDIA as well?
So interesting on Amazon quickly, they talk about conditions. I had heard from a source that there are two stages of this, two conditions. Basically, one is an IPO eventually. The $35 billion could come if the company goes public. The second does have to do with AGI, despite Altman saying on our air, we're pretty close to AGI, so we're trying to leave that out of deals. I'm told that is still roughly kind of a part of what they're doing. The NVIDIA side of this also appears, I haven't dug as deeply into the NVIDIA side, but it does also appear to come with certain caveats, certain chip partnerships. They are longtime partners, though, and OpenAI has long relied on their GPUs. So that is sort of standard for what you see with NVIDIA and OpenAI historically.
Okay, appreciate that. Came moving this morning on some very big news in tech. Our roadmap for the rest of the hour coming up, much more on that massive OpenAI round. Dan Niles will give us his first take ahead.
Plus, the CEO of $50 billion software firm Autodesk will be with us talking earnings as that name bucks the downward trend today.
And we'll have the latest on Warner Brothers. Of course, it will be owned by Paramount if they get the requisite approvals. We'll talk about that when we come back right here on Spark News.
Freedom, that's a cheap thing. Freedom to ignore this, that's a cheap thing. 800-pound bear chase, exfoliating, treating gravity like a suggestion, saying go try. All cheap things. Making a cheap vehicle for only people with cash like him, not a cheap thing. So we're bringing you more cheap things this year, as cheap things should be everyone's thing. Right now, during the Jeep President's Day sales event, well-qualified current FCA lessees can lease the 2026 Jeep Wrangler Willys 4-door gas model for $359 a month. See your local Jeep brand dealer.
I kind of want to add some more right here, actually. If it breaks through that high. Come on. Come on. Nope, you're going the other way. Fuck me. Fuck. Uh-oh.
backshares of Autodesk bucking the slide in software stocks that we've seen of late. After the company reported strong fourth quarter results, it did beat street expectations for guidance. Some of the stock is still down about 20% for the year. Of course, on those general fears around AI disruption that have been rocking so many company stocks. Joining us in a first on CBC is Autodesk CEO, Renee Dost. Andrew, good to have you. First on the quarter, before we sort of get to the AI conversation, your results were above the high end of guidance, I think, on revenue and margins, free cash flow, one reason why the stock is up. Some saying, though, your fiscal 27 guide is more cautious, perhaps, than might be expected, given that performance. Why is that?
Yeah, so it was a great quarter. We were up 18% for the quarter. We almost delivered $2 billion in the quarter. For the full year, up 18%. Free cash flow was up 54% to $2.4 billion. We did do it. We gave a strong guide. There's a little caution built into the guide because we did a major restructuring of our sales force, and we built some caution into the guide associated with the disruption with that restructure.
So what it's sort of around execution risk versus any sort of macro uncertainty?
Absolutely. We factored in execution risk. It's front loaded into the business, and we wanted to make sure that we captured that. And we did. It's captured in our guide.
All right, let's get to the bigger picture here, of course. And I know you're a veteran of this industry, so I want to hear your broader perspective. But specific to Autodesk, I think you said you're not trying to compete with frontier AI models, but kind of combine them with your proprietary data and context.
I don't like
so
it.
I guess what prevents one of these big AI
That fucking added
players,
to it too fucking quick.
building directly into design and construction workflows?
Yeah, you know what? I think the market's
I added to it too fucking quick.
Where the winners and losers are here.
I don't have any fucking room.
And what's really key to this is a couple of things you want to pay attention to, right? Are you in an industry segment where probably right is wrong? Where
I didn't give myself any fucking room.
In an industry segment where probably right is absolutely wrong. You have to have precision. You have to be able to deliver precision. And what do you need to deliver precision? There's a few things. You need complex content.
I already know what the
Not
fuck.
simple content.
God
You can't be working across one or two disciplines with simple data exchanges. You have to be having broad depth of content. We work across design, engineering, construction, pre-construction, manufacturing. That context breadth matters a lot. But that's not enough.
Order filled.
You also have to have a huge volume of scarce data you can't get anywhere else, so that you can train your own proprietary models that take you further than the frontier models can and provide that accuracy, that fidelity. And the last thing is you need the expertise. You need the people. And the markets are starting to figure out this rubric. And I think as they stress this rubric more and more, you're going to see the winners rising and the losers falling. If somebody's in just construction or just design,
Well, that fucking sucks. The thing that sucks about today is that there was just so much that sucked today.
Deterministic outcomes and how important that is. But when it comes to outcomes, I mean, if you are successful in it,
Overtraded.
to the overall product for architects and engineers, do you still sell on a per seat basis?